There is absolute carnage in crypto land right now. Everything is going down. Bitcoin, of course, is no exception. Now, I've actually anticipated this. I made several videos on how I anticipated that the prices are likely going to go down. I will now share again what those models were, how I sold early. Because actually this price drop is beneficial for me and for all the members that are following here. We are currently shorting the altcoins. We are betting on falling prices. Let's have a look at how much longer we can potentially fall and when it might make sense to buy back in again. So here's the problem with investing. When it rains, then it pours. Everything is going down today. Pretty much everything is going down this week as well. And on a monthly basis, there's also no winners. There is Roll Bitcoin, which went up very slightly, and there is the banana token, which went up by 10%. It's literally trying to find the needle in the haystack. Unfortunately, there is very strong correlation across crypto. You cannot really diversify your portfolio by having different cryptocurrencies. I said that I sold early, and I want to give a few proofs here. Check this out. This is a video on Premium. I am selling some Bitcoin. That was on the 14th of March of this year. Have a look at the 14th of March. That was over here, pretty much at the all-time high. Now, why did I sell that day? It wasn't just random guessing. There was actually on-chain analytics involved. Here's the main reason why I sold on that day. This is the value days destroyed. And when we look at this very closely, we can see that on the 11th of March, this turned red. The value days destroyed multiple got into dangerous territory, and the value days destroyed are a very good measure to see what are the long-term whales doing. Because whenever a lot of Bitcoin haven't moved for a long time, and then suddenly they get moved, then a lot of value days get destroyed. In other words, the big whales that tend to have diamond hands, when they suddenly turn into paper hands, that's when I want to exit as well. And that's when this turned red. And that's why I sold here. Now, I mentioned that I sold some Bitcoin. I didn't sell all of it. I sold the rest of my Bitcoin over here on the 19th of June. And again, I want to share why I sold on that day. By the way, for the value days destroyed multiple, simply search this within Google, right? This is a free indicator. You can simply get it on Google, VDD multiple, look into bitcoin.com. Then you can track this yourself for the next bull run. Now let's go into the second sale where I sold pretty much everything off. The second sale was based on this here. This is a back test that I have made for Bitcoin. I have back tested various moving averages all the way to the 200-day moving average. I've back tested the simple moving average and the exponential moving average. And with the back test, I found out that the 120-day simple moving average tends to work the best for Bitcoin. So it's quite a complex Excel sheet. It starts the data in August of 2017, goes all the way to today. There's a macro involved here that backtests all SMAs and EMAs, compares this to buying and holding. Over the time frame, we would have gotten annualized 28%. And with that macro, we can, by the way, backtest any asset here, but I've backtested Bitcoin in this particular sheet. With the macro, we find out that the 120-day simple moving average would have given us 127% annualized, right? That's this data point over here. And so that's then how that looks on a chart. There's the Bitcoin price in green, and there is the 120-day simple moving average in turquoise. And whenever the price goes above, we tend to be bullish in Bitcoin. Whenever the price goes below, we tend to be bearish. Of course, it's not a perfect indicator. Sometimes we do have our failed signals, but in general, I like this a lot. The backtest tells us very nice long-term outperformance over buying and holding, right? Just have a look at this. This is the Bitcoin price here in white, and this is our back-tested performance on a logarithmic scale. So that's the chart on a logarithmic scale. That's the same thing linearly. That's the current price with that moving average, and we turned bearish. And so here on the 19th of June, I made my announcement in the premium Telegram chat. We have closed below the 120-day simple moving average. I'm selling all my speculative Bitcoin and all of my altcoins. I keep the And this is where I stop the message here for public YouTube. I kept the short positions, as in I kept altcoin positions to bet on falling prices. So I made a follow-up premium video here on the 26th of June. The market is turning bearish. Again, that was over here. and now we see the ultimate value destruction. Now here's the big question. This moving average is very nice to time the medium-term trend, see if we are currently with positive momentum or bearish momentum. It's not so great to time the perfect tops, right? That's why we've got the value days destroyed to see what are the long-term holders doing. The big question though now is, if we are really in a bear market right now and we've already seen the top and we are going to continue to see negative momentum, at what point in time, at what price could Bitcoin bottom out again? What would be a price where sell pressure for Bitcoin is likely going to be exhausted? Again, let's have a look at on-chain metrics. The first thing I like to look at is the realized price. So this is the average price of all market participants. Sometimes we are above, sometimes we are below. So the market in aggregate is sometimes in losses and sometimes in profit. And whenever the market in aggregate is in losses, we tend to see less sell pressure and we tend to have very, very nice entry opportunities. So we had this here in the final minor capitulation in 2018. We had this during the Corona crash. And of course, we also had this during the FTX and Celsius collapse. That realized price is now at 30,800. It is still increasing, but again, the price can fall even below that realized price. I'm not saying that we are certainly going to see those kind of prices, but again, I believe this is where Bitcoin starts to become somewhat cheap again, where we can potentially buy even if current momentum is currently negative, if our time horizon is of course long enough. There's unfortunately a very useful model that points to an even lower price. And that's the long-term holder realized price here in blue. For each of those buying opportunities that we looked at before the realized price, we actually also fell below the long-term realized price here now in blue. During the Corona crash, we only hit this price within the day, not for a day close. But for those other three buying opportunities, we actually went below that realized long-term holder price. And currently that is at 20,000 only. In other words, I believe at $30,000, Bitcoin is cheap. At $20,000, Bitcoin is pretty much a steal, right? In case we ever see Bitcoin at $20,000 again, I believe it makes sense to even get into Bitcoin with leverage. Maybe even take out a personal loan to buy Bitcoin heavily. I am waiting with buying Bitcoin now. I'm waiting until either the short-term momentum turns around, which I believe is rather unlikely, but I would definitely buy back in case we rise again to 66,000. So that's more than a 20% increase from here. Or alternatively, I buy against the trend in case we really bleed heavily from here. I believe in this current market where we see nothing but losses left and right and where we went straight down almost every single day in the last month. I believe in such a market it makes way more sense to bet on falling prices, not on rising prices. It does not make sense, in my humble opinion, to try to pick the bottom, to catch a falling knife and to get then totally burned, get totally cut, and then your portfolio is completely crushed. I don't believe that makes sense. The moving average backtest suggests that the trend is your friend in crypto. Because again, have a look at this. Trading according to the moving averages pretty much outperforms buying and holding for most moving average durations. So when we are following the trend, we tend to be on the right side. Not always, but simply as per tendency. Thus, if the trend is currently bearish and if prices aren't yet super dirt cheap, why go against the trend? Why not go with the odds? Why not bet on falling prices? Again, shameless plug, I share in premium what kind of assets I personally short. I tend to bet on falling prices of altcoins that in general have a pretty high leverage, but also that have pretty bad tokenomics. So when the supply is expanding very fast, or when there is very likely going to be a lot of supply hitting the market soon because of external events, that's when I short. And that's how I'm making money with this asset over here, right? I opened that short in the first week of June. That's how I'm making money with this asset that I'm shorting for the last week, and I'm continuing to short this, right? This was a drop of 25%. And of course, I also made tutorial videos on just that topic, on how to short, on how to do this in Web3, and on how to pick the right assets without getting squeezed. The price of premium is pretty high though, so if your crypto portfolio isn't yet $5,000 or so, then feel free to rather join our free Telegram. The link is as well down below. Looking very much forward to chatting with you over there as well. Cheers!